Soaring interest rates, affordability pressures and weak consumer confidence led to a housing downturn last year. Now that's all changing. This 4-bedroom house in Bondi was supposed to go under the hammer this weekend, but that won't be necessary. It sold today ahead of time.
We're seeing a lot more confidence in the market than we saw even 6 months ago and about a year ago.
I think we were perhaps a little bit reluctant to sell in a market like this, particularly because we've been hearing that things may be slowing down, but we got the result we were looking for in the end.
The latest data shows Australian property prices are continuing to recover, rising for the 6th consecutive month. Across the nation, house prices rose by 0.8% in August, despite being down 1.1% for the year. Brisbane recorded the biggest increase, 1.5%, followed by Sydney, Adelaide, Perth and Darwin. There were modest gains in Melbourne and Canberra, while Hobart was the only capital city to see a fall in prices. Houses are typically seeing more growth than units.
What's really driving the turnaround is simply very low supply levels running into roughly about average levels of demand.
But analysts are expecting a slowdown in the pace of price growth as more supply comes on the market over spring and summer, which historically are busier selling periods. The hot rental market is finally starting to ease. Rents increased by just 0.5% in August, the smallest rise in almost 3 years. Although vacancy rates are still at record lows.
Renters are reaching a ceiling on how much they're able or how much they're willing to pay in rent. And we're really starting to see more evidence now of a restructure in rental demand.
The Reserve Bank is expected to keep rates steady when it meets on Tuesday, giving renters and homeowners some level of certainty. Lydia Feng, ABC News.